Do's and don'ts, baby. Do's and don'ts.
And all right, Jonathan, what are we talking about?
Real estate and credit.
Go.
Oh, we're live? All right. Awesome, guys. Hey, welcome to Newbie Real Estate Investors Podcast. Finally, episode 24. We have our co-host over there in the corner, Joe Vala. And then we have Vlada and the return of Mr. Jonathan Boyle.
Welcome.
And our guest, Anthony Rosa, today.
Awesome.
Nice. So we will be talking about business credit today and how does business credit relate to real estate, right? So, Anthony, can you give our audience a quick intro of yourself
Yeah, sure.
before you got into the business credit? You know, just a
Absolutely.
little bit so, everybody kind of knows what's...
Yeah, sure. So first, thanks for having me. It's good to be on and giving this information. I think that it's something that everybody should know. These little tips and tricks and do's and don'ts for anybody that has any aspirations of, getting into the business world. I think that, my background, I started in banking. I was a banker with Wells Fargo starting in 2014, a couple moons ago. And, prior to that, I had experience working in different management training programs, just kind of always with that one-on-one, Sherwin-Williams and Enterprise, to say the least.
Okay.
And so it was really exciting. Once I found banking and giving that information, I thought that this is information that shouldn't be held inside.
Yeah, so what kind of interested you into getting into business credit, or how did you actually get into business credit? Like what introduced you to that?
That's an excellent question, and I think that it comes from my upbringing. I grew up in what you would consider a low income household. And, with that financial literacy, lack of background, they say don't take credit, use cash for everything. And, now I find myself with these student loans, then I'm hearing they're going to forgive them or not. What are they going to do? Should I pay them? I don't know, right? And so I got into it really because I grew up aspiring to be a business owner. And, rather than kind of getting into a product-based or retail, I found a niche in professional services. And I thought that providing professional services and education information, it kind of was, it filled me up a little bit more, right, than being transactional, seeing the outcome. So that's kind of like what really kind of drives why business credit, because you could fire your employer, you could have a better work-life balance, you could, call the shots in a sense. And I think that empowering people to be able to do that with obviously proper, strategies and, in place, I think that you can kind of retire young and have that ability to do what you want and enjoy it rather than have to be dictated by other terms.
Nice.
Yeah.
So now that we know what kind of drove you to business credit, how did you get into business credit?
So 2011, I had a marketing company in
Okay.
Hoboken. And, there we were management training program for door-to-door sales. And so there I really understood, because I was hiring these individuals to be 1099, their tax incentives and benefits. I have the same tax benefits as a McDonald's or a Walmart because I have a home-based business.
Right.
And to be able to teach others that, hey, you may have a hobby, you may do this or that. And did you know that there are benefits of opening up a small business, a home-based business? And so that's kind of like what really led me into that. So when I got into banking in 2014, and now I'm getting corporately trained, and I'm kind of understanding a little bit more about their underwriting guidelines and their profiles and who they identify as good credit-worthy borrowers. I said, wow, this is, amazing that I can marry these two together, and I'm getting paid by the bank to provide this education. And that's kind of like what led into the business banking and the coaching.
Pretty cool. So why don't we go over a little bit as far as how can let's say a real estate investor like myself, or well, maybe not like exactly like myself, but someone who's kind of just getting started, right? And how, or what should they do and what should they not do as far as, acquiring business credit?
Right. So today we're going to be talking about some do's and don'ts. And,
Okay.
if there's anybody live, feel free to engage, put a comment. If we can pick those questions up, it'll be great.
Yeah.
The first thing that I would suggest for anybody getting into this industry or wanting to build business credit is establish separate accounts.
Okay.
It sounds simple, right? But having multiple checking accounts per project, especially if it's related to different LLCs, if there's different properties and you have your personal, you would try not to mix the personal with one project, let alone having your personal on multiple projects, because you're just kind of running your project as you go. So the first thing I would say is separate your accounts.
Okay. Yeah.
Yeah,
So,
it
right.
seems simple, but sometimes it gets difficult when a certain amount of money you have allocated to different things, and one big slip up happens, or not slip up, but one big thing, like for example, like a boiler goes out or something, then you have to like figure out where to allocate that money from.
Well, you always want to make sure that you're doing the proper entries, right? So if you're taking from one LLC and you're going to loan it to a different LLC to cover this cost,
Yes.
you put the entry in properly so that you can have that transaction history there. So
Exactly.
that would still help the cash flow from bringing from another business to a different LLC. And that's definitely something you should talk about with an accountant as well.
Yeah, definitely. I figured you'd bring that up.
I'm not an accountant. I work with many CPAs and accountants, and it helps in my field as a finance coach because I need to validate certain things that I'm suggesting and proposing that have any tax incentives. So I rely on, my professional partners, because if there's something that I can advise them on, then I would suggest them to someone in my team that does.
Yeah, absolutely. So just a quick thing, so we don't really sidetrack here, but you can work with almost any business, right? It doesn't have to be just a real estate investor. It can be almost any business. Is there any type of business that you're kind of restricted from working with?
No. If you have a tax ID number and you're registered as a sole prop, an LLC, really it's just business banking. And as a nation, we are using the same guidelines and traditional banking. And so there's different ways that someone can build their business credit, which can help them kind of continue on in their projects.
Is there can you walk us through what it takes to kind of build your business credit? Like, for example, what someone would need, like let's say an LLC, or can
Yeah,
you kind
so
of walk us
from the
through
basic
that?
level, right? So from the
Yes.
basic, you want to get obviously registered. A lot of people in real estate, just to say that industry, they're using their social security numbers and they're still 1099. I say at least if you're going to use your name, at least get an EIN number. You can go on SBA.gov and just kind of go to an EIN. And if you're a sole proprietor, you still mask your social. So at least you're doing that. But when on the business side, on the S corp or multi-partnership, you want to register with Dun and Bradstreet. Right? There's different databases that businesses, not necessarily all the credit card companies and creditors report to all the databases.
Right.
But as long as you know who the databases are and you have history that's monthly reporting positive payment history, paying your bills on time is probably one of the largest reasons why a credit-worthy profile is a good borrower. And, sometimes if you're managing multiple projects and you're paying a high interest rate and you're waiting to sell something, you're waiting for cash to come in, at least you're carrying the minimum payment.
Yeah.
At that point, I don't care about the interest that I'm paying, but if I'm paying that minimum payment, then at least I will satisfy that minimum payment for that month, that pay period. If I, with my vendors or with my creditors, pay one time late, they can put a delinquency on my account, and now all these databases will show that I am not a good payer as a business owner.
Right.
Mhm.
Yeah. So another question would be, what is the difference between your standard consumer credit versus a business credit?
Oh, wow, that's an excellent question. There are 5 credit factors on the
Okay.
personal credit report, right? Credit factors. On the business side, there are more. And to understand that when on an individual will say, oh, I have 1 or 2 credit cards, that's enough. I'm okay. I don't want any more.
Right.
On the business side, that's not the case. They want you to have multiple trade lines, right? They want you to have a healthy credit mix, whether you have a loans or lines, an auto loan, things like that. And those are the determining factors, right? And utilization on the personal side, balance owed is one of the largest credit factors, right? But balance owed on the business side doesn't have that same impact as far as the score goes if you're maintaining a high balance.
Would it actually be kind of better to have a higher balance out on the business side?
I
And
mean,
so long as you're repaying it, of course.
all right, so I have to add a little bit more to that, right? Because there's a difference between a cycle closing date and the due date,
Yeah.
right? So if you're carrying a balance, but you have the cash available, right? Look at the due date, all right? I paid $189 minimum payment. I have the money. I just purchased a large payment. I just closed on a project. My cycle closing date is the 23rd. If I carry a balance higher than Rockstar status is 15%, if I carry a balance over 15%, my credit score on a personal side will immediately drop. Immediately. And the scary part about it is that when you make that payment the next month, it doesn't rebound the same way. And so you're asking yourself, why? Why is my credit score not improving? Salud.
That's it.
You ask yourself, why is my credit score? Good luck. That's good luck. When you ask yourself, why is my credit score not moving? Is because you might be carrying a balance, making the payment, but you're keeping a high balance after the cycle closing date. So it's okay to keep a high balance. I don't want anybody to be afraid of carrying debt, but it's just the balance that you keep by the cycle closing date.
That's just for the personal side. What about on the business side?
Well, on the business side, you can carry the debt, right? You can carry the debt, and depending on projects that you're having, you don't want to overexhaust yourself. I always say, if you have good credit, what's good credit in certain banks, right? 680, 700, right, in that area, personal guarantor. If you have carrying the debt, it doesn't have that same impact, but you don't want to overexhaust yourself at the wrong time. So if you have good average balances and good credit, that's the time to capitalize. Not when, oh, I'm good right now, I don't need it. And then you find yourself, oh, I had this term of 40 days and this contract is delayed and I thought I was going to sell and now I'm carrying the debt and now I have to pay another 6 months for insurance and that premium is going to cost. So now that when you're delaying on projects and now it's costing you more, you're not expecting these costs and delays. So when you have that, when you open up a new account, leave a large deposit in there, let that for 1 month, just carry that average balance. And then if you're going to submit an application, don't do it manually through the online. Don't do it just with a regular banker. Do it with a relationship banker, an AVP, someone that they can represent you with the underwriter when they're giving the write-up. And these are kind of like the little hidden tricks and, remedies that I suggest. because carrying debt doesn't hurt you as long as if you're trying to finance more projects in the future and you overexhaust yourself, and at that time when you might need to borrow again, they might look at you a little bit different.
So this is in regards to business credit,
Just
right?
in general, business credit.
Okay.
And I'm not talking about just real estate or a contractor industry. It could be any kind of mom and pop. It could be retail. It could be logistics, warehouse, et cetera, et cetera. You know, some of the don'ts that I would probably say is you don't want to excessively use your credit, right? I'll give you an example. If I have my fuel card, if I have my Home Depot card, because I know I purchased from Home Depot, if I have my Amex that I know that I do other expenses on that card, I'm not going to dump all my expenses just on one card. I'm going to spread the load, right? I'm not going to just put all my purchases on this one card. And periodically, if I'm requesting credit limit increases, then I'm increasing my buying power. But you got to be careful, because on the business side, when you're requesting a credit limit increase, typically they're going to run your credit. Right? On the personal side, depending on some creditors, they don't run your credit. But if you're excessively using your credit, you want to be just mindful. So what's the solution there?
Yeah.
I suggest budget plans and having a weekly call, whether it's myself individually or with my team, kind of going over our expenses, micromanaging our purchases, you know, because if I can control my deadline and I can control my times and delay, then I can control my profit margins. And so the budget plan, you should set up on a Friday at 7 a.m. We're going to do a Zoom call for 90 minutes. We're going to go over the accounts. We're going to go over the transactions. We're going to go over the expectations, get it in and get it out. Every Friday as a team, we talk about this. And, you know, to finalize that note is there's a lot of business owners that they're just going to say, oh, I let my accountant handle that. I let my bookkeeper handle that. But then what happens if there was a small error or something that you oversee and you didn't understand that that was the cost that you were originally paying? By allowing all these people handle all these things, you're kind of like taking away your empowerment. So just be mindful of that.
Right, because they don't know what you're gonna spend or kind of what your budget is, right? They're more so the aftermath of what you already spent.
Yeah,
Right.
they don't realize maybe that was like an oversight on your part, that that was an extra spend that wasn't supposed to be there.
Yeah, because now once you get to the accountant or the bookkeeper or whoever, they're just kind of what they're doing is just categorizing your expenses. That's it. So they're not, for the most part, helping you plan ahead. Hey, in the next 3 months, I have this building I'm planning to purchase, or this equipment I'm gonna buy for my construction company, or whatever it is. They're not really, doing that.
Right. They're not doing that. And so
Yeah.
if you don't know your numbers, right, I'll speak to a contractor and I'm doing a budget plan with them. And, let's pick up a cleaning company, right? A cleaning company, they have a couple doctor's offices that they have to clean, right? Sometimes if they're using multiple rags and multiple mops, right, they're not cleaning the toilet that they're cleaning the floors with, right? They're not using the men's bathroom to the women's bathroom, right? But all these mops and all these gloves and all these expenses, they're not accounting for it, plus the time that it takes to change everything. And now with their employees, they're overusing supplies, you're running over supplies, and now you're not accounting for some of these expenses, and you find yourself, I'm doing $25,000 a month, my payroll isn't that much, but I don't see my money. Right? And it's for these reasons, is that people don't really know what they're spending. And I love their expression when I use my Google sheet and I'm kind of going over everything and I'm separating the personal from the business. And I'm like, did you know that you're spending over $10,000, on this and that? And they're like, they have these realizations, It's funny that we're talking about this, but in all reality, there's a lot of misconceptions of credit, business credit, how it's built, right? You see these advertisements of $150,000 in credit tomorrow.
Yeah.
And then you're like, can I qualify? I'm a business owner.
Yeah.
Can you help me? Right?
Where do I sign up?
Where do I sign? And then you have these cool ClickFunnels advertisements and a nice, decent ticket size price. And you're like, this sounds too good to be true.
Yeah.
I still get so many phone calls about those.
You know?
I don't answer phone calls
Yeah.
unless I know them at this point.
Listen, I'm not saying that it's impossible, but I'm saying that banks are very selective. They're selective on risks, their NAICS code, your industry, your average balance that you're keeping. It doesn't matter if you have $100,000 coming in, because if you have $99,000 coming out and your average balance is $1,000,
Right.
doesn't matter at that point, right? And so it brings me to my next point of my don'ts is don't close old accounts. On the personal side, on the business side, I don't care if it's a vendor that you're not using anymore. Don't close that history, because closing any history has a negative impact. On the personal side, a significant impact. And on the business side, you want these multiple trade lines.
Right.
So you see these tier 1, tier 2, and they say, oh, you don't need these Uline or Quill. They don't need these accounts. But in my opinion, these are the trade lines that if you were to let your bills build your credit and you're properly incorporating your budget plan, you're creating relationships with suppliers and vendors that are going to give you net 30, net 45, net 15, net 14, these different terms where now as a business owner, you can delay your payables. And then if I have, an account, a commercial account with a supplier, and they give me a term, and now I have my credit card, and I pay them off. They gave me a term of 30. My credit card gives me a term of 30. Now I just delayed this payable by 60 days. And then if I had a business line of credit, I pay my credit card with my line of credit. I just delayed that payable 90 days because I'm waiting for my contracts to close.
Right.
So it's all about velocity banking, right? That's a term, velocity banking, is letting and living off of your line of credit. You see, I could think of money and I think of air. I just don't think about it. I'm not rich, but I know my numbers. I have my lines of credit. I have my strategies in place where the cash flow just comes, and then you're at a point where you don't have to delay your payables because you're kind of in a sync, right? And by doing these and managing your projects and opening up trade lines with your vendors and your suppliers and all industries, you're letting your bills build your credit. And that by that, right? If you're at the point of sale, right, and you have cash, debit, or credit, just to kind of open up on the conversation, what would be your preferred method of coming on the point of sale? Cash, debit, or credit?
Oh wow! I'm sorry. I'd prefer cash. Right?
Cash. Okay. What do you think? Cash, debit, or credit? On the topic of credit, of course.
Like if they're paying me, what do I prefer?
No. You're at
you're
the point of sale.
paying.
Me.
Yeah.
Paying.
Credit.
Oh, credit.
Credit, right?
Okay, I
You know?
misunderstood
Same,
the
yeah.
question. My
So
Yeah. I usually use, depending on which one has the most points.
yeah,
Right. So I'll use my, let's say Amex or, whatever.
right.
Yeah.
What card do you like the most and why?
What card do I like the most? I have a bunch of credit cards. So I like the Amex Platinum the most. Because it gives me lounge access, number one. And then also I get credit, about, I think it's $200 of different airline credit.
For my travelers,
Yeah,
right? So of
right.
course, yeah.
So
So does that? Are you okay with the annual fees?
the
because of
annual
the
fee is up
rewards?
there. Yeah, it's about, I think, $695. They just upped it. It used to be like $595,
Yeah.
something like that. They upped it. But I do travel a little bit,
Right.
like, for example, I've saved up enough where I was able to get business. I was just telling Vlad at lunch that, I saved enough points where I was able to get my entire family a business class trip to, Italy, right?
Oh,
Off of
nice.
points.
Nice.
So
Free
all I had,
trip? Who likes free?
yeah.
Right.
So isn't that freaking
What it's all
amazing?
about, yeah.
I mean, before I got into, we call it points and miles, right?
Right.
Before I got into that, I always used my regular my debit cards, and I had a couple of like really crappy credit cards. You get 1x points, you know. And then I never had lounge access. And this is very recent, you know. Like before that, I didn't even know. I was like, oh, I thought in order to get lounge access, you had to fly either business class or first class,
Right.
right? Or you just had to be like a super frequent flyer.
Right.
And that's it. I didn't even realize like Amex Platinum or even Amex Gold can get you. Actually, I don't think Gold, but you know, you have like the Chase Sapphire,
Yeah.
right, and then a couple other like airline cards that you can,
Right.
you know.
You know, I find it amazing, right? I had a client of mine, and I still work with him. He's a good friend of mine. And, you know, a lot of the members that go into my program, you know, because we share so much and I get so deep in the weeds, we actually become really good friends, right? And, you know, I always say I'm your lifetime financial coach, right? So as a community finance coach, really, you know, it's a burning desire, really, because I felt like I was one of those that kind of almost fell through the cracks, you know. And then at one point, you know, we have our highs, our lows, and for every high, there's a new high. For every low, there's a new low. And, you know, we all kind of struggle with these struggles, right?
Yep.
But I think that if we're having these kind of conversations, sharing this information is so important, you know, and we have to maintain consistency, right? I had a client that he was with TD Bank,
Okay.
and it's a $5 million commercial painter. And his banker always promised him, oh, I'll get you $1 million line of credit. Just give me, you know, your financials and let me submit it. And, you know, this is around the time where I was trying to earn his business. And it took me 3 years with this person.
Oh, wow.
Right. I was personally recommended by a personal friend, but it's an older gentleman. He's kind of mended in his ways, didn't want to change, and, you know, didn't really want to kind of hire anybody, right? To kind of say, oh, who are you to tell me how to run my business, you know? So long story short, he applied with them. It took over 2 months to hear back, lack of communication, you know, there was a break. Long story short, he gets declined. He goes, I thought you promised me, to his banker, TD Bank, you know, I'm sorry, TD Bank, I love you guys. But, you know, they declined him. So I look at his credit, I look at his history, immaculate credit, 780 credit score, $500,000 average deposit. You know, you see his, you know, really good statements, right?
Yeah.
And so I'm questioning myself, right? So I go to Dun & Bradstreet, right? And I go to see, and I'm like, he has one creditor with a credit limit of $1,300. He has no
God.
credit history.
Oh, wow.
He's been established since like the 90s. No credit history. Never had a need for business credit. But now he's like, you know, I'm getting to a point. I wanted to buy my building. So that's kind of where I came in, because he was getting denied for business credit.
Yeah.
So I'm saying, listen, give me a couple months. Let me build this up. Let's build up some trade lines. Now let me work on getting you some business credit cards, right? So I got some business credit cards. Then I said, listen, he needed a loan right away, right? It was during the season that it was kind of short time. You know, the cash flow wasn't coming in. You know, some of his projects were getting delayed. And, you know, he does a lot of projects in affordable housing. So it takes time for those government contracts to pay.
Yeah.
And at 30, 40, 60, 90, it could delay. Sure. And with his contracts, you're talking about $500,000, $1 million in receivables. So he needed fast money, right? So there's different lenders that they offer these cap rates, right? It's not an interest rate, but it depends on your average daily, and you know, your payback can be significant.
Yeah.
But he needed it, right? So I don't recommend those type of loans because these lenders, they're kind of sharkish, so to say, you know, but they come clutch, right?
Yeah,
they
for
come
sure.
clutch, you know, it's less paperwork, you know, give me $200,000 tomorrow and da-da-da-da-da-da. Right? It happens.
I mean,
So
in real estate, we have hard money lenders, so I get it.
And
Right.
private money lenders don't want your firstborn child.
yeah, so on the business side, it's the same thing, right? You have these gap funding lenders. So long story short, you know, I had to give him a $250,000 loan. Okay, I said, let me work on this. I'm gonna refinance this through SBA. Okay, it was $250, paying $3,500 a week. Unless I closed the SBA loan, I kid you not, in 45 days, his monthly payment was $3,400, and it was long-term 30-year.
Wow.
So now I got him a $350,000 loan. On top of that, the cash injection of the 250. Now I built up his business credit to a point. We went to M&T Bank. I got him a $100,000 revolving line of credit, traditional.
Nice.
You know, and so like these stories don't happen all the time, but I love sharing this type of story specifically because it shows you had good business, good industry, good credit, but you don't have the business credit history established. So without that profile, a bank could still decline you.
Yeah, that's true. That's true.
For sure.
Yeah. I mean, I have a TD Bank line of credit.
Mm-hmm.
Thank God. But
Thank
it
God.
did take a long time to
Yeah.
get it approved. It took, I want to say it took about a good 4 or 5 months just to
Yeah.
get it done. They asked for so much documents. It's
Yeah.
unbelievable. Monthly statements, all kinds of stuff, like prove your address, is your office here? Is it there? Because I've had different addresses. So
Right.
each time they're like, oh, how come it's different than your formation LLC? My formation was back in 2011. So, it was a long time ago. And then that was like my third iteration of my company because I started out as basically an LLC myself back in 2003. And then I partnered up with someone. I want to say like in 2005 or six or so. I think 2006. So we formed a new company, and then we dissolved the first one, and then after we split up in 2011, I created my LLC again.
Right.
So yeah,
That's good. Congratulations.
thank you. But yeah, I mean, one last thing before we kind of end the show a little early today. What do you recommend for anyone who's kind of like just sort of getting started, has no idea, but does need some business credit or does need to establish business credit? What kind of things would you recommend that they do
Yeah.
besides reaching out to you?
Of course, reach out to me. Come on, I'll give you the blueprint. Look, make a list of their supplier vendors.
Okay.
That's the first thing I would say. Find out if they provide any kind of terms, right? Set up a budget plan, right? So you don't overexhaust yourself, especially if you don't have too much startup capital and, you're not living at home, you're on your own and you carry a lot of debt. If you're living at home and you kind of have that exit strategy and, you're not paying a $1,800 rent or mortgage, then, you could take a little bit more risks, right? So for, those that still have that benefit, but, making a list of suppliers, registering, getting a DUNS number, these are kind of like some of the fundamentals, right? And establishing relationships with different banks, right? Establishing relationship with the manager, establish relationship with the personal banker, establish relationships with the treasury management partner. These are partners at the bank that you want to have a relationship with. They want to be able to vouch for you, especially when it goes to a manual underwriting review.
Awesome. So how can the audience, whoever's out there listening or watching, how can they get in touch with you?
Yeah, I mean, look, quite simple, right? It's an age of online and, just watching this, you can comment saying, hey, I want more information. How can I set up a meeting? And we'll engage, I'll respond. That's number one, right? Number two, you could visit my website, Fresh Start Advancement. There's information there. There's actually a debt calculator, right? One of the biggest things that I do, especially if you have good credit, is I help you consolidate or with different consolidation plans through snowballing debt. And, very unique ways that I can help people, with balance transfers and, personal loans for consolidation. Because, of course, you want to get up to a certain point as a business owner, with a personal credit. So we need to make sure that you're there, right?
Yeah.
For anybody who's starting out and you have a couple collections and you have, no personal profile established, you probably want to start working on that. At the same time, working on your business plan, because without your business plan and without your budget plan, without you really understanding your downfalls in your industry, you fail to plan, you plan to fail.
That's
and,
right.
I think that just kind of using those tips and tricks, I think is really important, and if anybody wants to reach out to me and you're watching still right now, you can reach out 201-870-0473, 201-870-0473. And, I had a really great time coming on and sharing and, trying to give you guys some tips and tricks and some do's and don'ts on building business credit. Thank you.
Thank you.
Awesome.
Thank you.
Thank you. And before we get off, John, how can they reach you?
So you can reach me at, mostly my Instagram, the real estate John Boyle, or you can reach me, via email, john@boyleventuregroup.com, or Facebook, Jonathan Boyle. Simple.
Yeah. And Vlada?
Probably Instagram is also the best way to get a hold of me. Vlada.a.kovileva. Yeah.
Awesome.